What's going on, guys? Welcome back to the channel. A little bit of a change up of scenery. This is only for the day. We'll be back in the studio tomorrow, but there's a lot that we have to cover. The fact that AMC is going crazy even since the last video that I put out earlier in the trading day today, up 7%. We're looking at a massive gamma squeeze potential by the end of this week that could actually last for the next couple of weeks. So let's talk about it, guys, as well as go over the Ortex data, the Stonko Tracker data, the Fintel data, and an article from Zach's going over how the options market is pricing in a big move for AMC stock. So let's talk about it, guys. Hit that like button for me. Consider subscribing to the channel. And if you guys have not already signed up with the sponsor of this video, which is Moomoo, when you open a brand new brokerage account, you get one free stock. When you deposit any amount, it could be 1 penny, you get another free stock. And if you do deposit $2,000, you get 3 more additionally free stocks. That is a total of 5 free stocks, and those other 3 stocks are worth more than the first 2. But still, when I signed up for them, I only got 1 free share. And I deposited $100, I got a free share of Starbucks. So if you guys are not signed up, definitely worth taking a gamble. You can't lose anything by doing that and seeing what you do get. So let's get into this video, guys. Hit that like button, all that good stuff. We're not even gonna waste time on that. AMC is up about 7% on a beautiful technical setup as we currently speak. Just been pretty much rallying all day with small drops here and there, but we're retaining our strength and we continue to set higher highs every time we do fall. Likely by the end of the day, we should be higher than $43.23 per share, which was our high for the day. If that happens, and especially if we do see another green move in the after hours, which is expected, then we will see this continuation keep going, right? But something I want to point out is that we are almost to the close of today, and we only have about 34 million in volume for the day. And with a 7% positive move, this is not short covering. This is likely just apes holding onto their shares, some additional buying as apes just buy on a regular basis, but it's likely due to this gamma squeeze situation. If we were seeing shorts covering, we would see much higher volume, and that is simply not happening. But the greatest thing about this is when we do see shorts covering, when we see more FOMO buyers coming into the stock, and we see higher volume, you're going to see even more explosive moves. 34 million shares traded today and a 7% positive move. Imagine when we get 100 or 200 million shares that are trading hands, you're going to see a 20, 30, even 40% possible positive day on that kind of volume. And that is only around the corner. Now, there's a lot of factors playing into this as well. We just had earnings. There was a lot of bullish announcements and great things for the company that were announced that are starting to be priced in. But something else I do want to call out is that from back here in August, we are playing out the same exact way. So this goes into my price prediction, which I gave last night, Sunday night, for the end of this week. And as you guys can see back here in August, we had a green day on the day of earnings, just like we seen during the last earnings, and then 2 very red days after, like we seen with this last earnings. And then we did see 4 green candles going back to the level we were at before earnings, which back here in August was about, what was this, about $40 or $38, excuse me, $38. And back here with our last earnings, we were at $45. So if these same situations play out the exact same, not saying it we'll probably go higher this time around, then we should go to $45 by the end of the week. And then we will see a slight pullback like we did see with the August earnings, probably down to about $43 per share, and then continue to make a move higher. But I'm not a fortune teller. We could break out well past $45, go straight to $50 per share. Anything is really on the table, and we're going to talk about the gamma squeeze that is going on right now. And this is really the caveat here that could push us a lot higher. And what we're looking at for the end of this week, guys, we're looking at the $43, the $44, $45 strikes. All of these strikes have a lot of open interest. I apologize, my daughter's over there. Her toy just went off, so don't pay any mind to that. But for the $45 strike, especially 13,743 for open interest. All of these strikes are well over 5,000 for open interest, going back to even the $39 strike. And these strikes, the closer we get to Friday, the more hedging you're going to see by the market makers. As that gamma level goes higher, more delta hedging has to happen to remain delta neutral. So that is the overall situation here. Some incredible amounts of volume that is just around the corner from going into the money. Specifically at the $50 strike as well. Almost 22,000 for open interest. So you're like, there's no doubt about it. You're seeing a gamma squeeze. This buying activity is due to the options market as well as trading algorithms that are also making trades based off of AMC's bullish technical setup. So that is the situation here. Some decent amount of volume as well, but most people are just buying these contracts and have been holding them, not necessarily day trading them. But besides the $45 strike has about 28,000 for volume on the day. That is one that may have been day traded a little bit more. I'm not saying to buy the options, they're already here, so we're going over the data that is suggesting this move. And as far as the option chain is concerned, we could go to about $50 by the end of this week. That's really where you start to see the open interest start to die down just a little bit at the $51 strike, 8,800 for open interest, and then it starts to die down a little bit more at the $52 strike. But that is the overall situation as far as this going out a couple weeks, because you're seeing the same thing on the December 17th strikes as well. And on the January 21st, 2022, which is only 60 days away, that theta decay is going to start doing its thing and start bringing these contract values down. Whereas the closer we get and the more contracts that are remaining in the money, higher that gamma level gets, the more delta hedging that has to happen, even for the strikes that are a couple weeks out. So that's really what you guys need to know from that. Let's briefly go over the Ortex data. I do apologize for my daughter in the background. She just woke up from a nap. If she does scream or something, I apologize. But the days to cover, 2.66 days to cover, short interest of free float at about 18.5%. This is the exchange reported short interest data because the Ortex live estimates are just flat out wrong. So I don't want to give you guys just misinformation because the stock has went down since earnings, since October 29th. And it doesn't make sense to say 2% of the short interest was covered in that time frame. A little bit over 2% does not make a lot of sense, so we're not going to go off of that. But the shorted shares at about 95 million. So the days to cover here, very important. Once the shorts do and are forced to cover, likely in between the $50 and $60 price range, because most short positions probably got in between $50 and $60, so they are green on their positions. Now, obviously, when you factor in the cost to borrow, you factor in all these other things, maybe they're not as green as you would think just based off of where we were at about $42. They sold the stock short at 50 or 56. But point is, once we get up to that really that 50, 55, $60 level, you're gonna see some shorts that are more inclined to cover on their short positions as they are seeing them go from being positive to almost being negative. It only makes sense, right? If you're looking at the chance of seeing a winning position go into a massively losing position, wouldn't you want to get out of that position beforehand? It just makes a lot of sense. But you will see that reflected in the price action and the volume. That's how we know shorts are not covering today. Now, let's move into these 13F filings, and we're seeing a lot of directionally bullish trades that are going on right now. 1, 2, 3, 4, 5 put positions that were sold out of right here. $14 million worth of shares that were sold out of, so that's obviously a directionally bearish position, and 1 call position that was sold out of as well. Other than that, firms are holding on to their positions in overwhelmingly high numbers and even adding brand new positions. Right here, 137,000 brand new shares, 176,000 brand new shares, and most of these red lines are actually, like I said, put positions that are being sold out of, so directionally bullish. So the overall flow and sentiment from hedge funds and institutions is still incredibly bullish. Now let's talk about the Sanku tracker data, and then let's briefly go over this Zach article that is basically just telling you guys what's going on with the option chain. So basically along the same lines as the gamma squeeze, 196,000 calls that are out of the money expiring this Friday, 43,000 calls that are currently in the money. So we're seeing about 20,000 more calls that went in the money today, and this is causing a 7% move. If we do see this continue to climb, we go to about $50 per share. You're going to see probably most of these options go from out of the money into the money with only a couple days left till expiration. You're going to see all of these contracts basically having to be hedged for in the next couple of days, and I do think we're going to see a continued move to the upside. So that's the situation. The December 17th and the January 21st are the next big days. Definitely in the next 60 days by January 21st, you're going to see some big moves to the upside. You're going to see a lot of volatility around that January expiration date. So not too important because it's still about 60 days out, about 2 months out, but that'll be here before you guys even know it. So this article from Zacks, it says, is the options market predicting a spike in AMC Entertainment stock? Investors in AMC Entertainment need to pay close attention to the stock based on moves in the option market lately. That is because the December 17, 2021 145 call had some of the highest implied volatility of all equity options today. What is implied volatility? Implied volatility shows how much movement the market is expecting in the future. Options with high levels of implied volatility suggest that investors in underlying stocks are expecting a big move in one direction or the other. It could also mean that there is an event coming up soon that may cause a big rally or a huge sell-off. However, implied volatility is only one piece of the puzzle when putting together an options trading strategy. What do analysts think? And obviously they go into earnings, which is what they say is pretty much neutral. They say some good things, some bad things, but what you guys need to know is exactly that. We have no real event that is scheduled to come up now. The implied volatility, and this article is from today, is spiking today based off of investor sentiment and what is happening at the current moment, not based off of an event. So options buyers, options sellers, they are pricing in bigger moves coming for the stock, and I think that is definitely skewed to the bullish side, as we are seeing a 7% positive move today. We are seeing a lot of bullish activity overall. Apes are holding on to their shares. We have low volume, high days to cover, a lot of shares that need to be covered, as well as a lot of good things from earnings that came out that need to be fully digested. So that is the current situation. As far as my price target, it was $45 starting on Sunday. We're getting close to that. We're almost at about $43 as we currently speak, up about 7%. On the higher end, about $50 would not surprise me by the end of this week. On the lower end, like I said, about $45, that's where I'm going to keep my price target. But keep in mind, I'm not a financial advisor, I'm not a financial planner or your dad, so ultimately come to your own conclusions and always do your own research. Now, before we wrap up this video, check out the links in the description if you guys want access to all of my trades in real time, day trades, swing trades, long-term investments with stock, options, and or crypto. Check that out. You guys are notified every time I make a trade, whether I buy or sell anything. As well as that, the sponsor of this video, which is Moonwolf, gave you guys the rundown of that. Link for Public, link for Webull to get all the free stocks your guys' heart desires and help support the channel. So I do apologize for rushing through this video. Daughter is up now, so I'm going to tend to her. I hope you guys enjoy the rest of your day. Thank you, love you for watching these videos and making this all possible. So that's going to be all. You guys, I'll see you in the next one.